Hey guys, how's it going? Dennis here with primetraders.com. This is a normal type of video that we're going to be making every weekend. It's a very quick video about our strategy and general trading tips. These videos are all designed to get our members and everyone on the internet, when we do release it on YouTube, to get into that primed mindset for trading and just get organized and, well, have a clear strategy, a complete trading strategy, backed up by a pretty strong mindset for trading. Okay, so welcome to the video. Like I said, every weekend, starting with this weekend, I'm going to be releasing short, medium, or even long videos on tips on the primetraders.com strategy and the way we trade. The videos will cover essential points of our strategy and help you to add it to your daily trading routine and life. But, like I said just now, the videos will not only cover specific information about our strategy. Just like today's video, they will actually provide you lucrative tips that can make you a better trader. So let's get going. What this video is all about. Number one, we're going to be going over some primed system trade examples. I'm going to go over a couple of trades that I've taken this week. And number two, I'm going to explain to you how you should trade better and then trade bigger. Basically, trade better before you start trading bigger. Trading smaller allows you to learn from mistakes. We'll get into detail about this, but let's start with number one, trade examples from trades taken this week. Now, I'm going to go over a couple of trades that were taken this week, and I'm going to briefly explain the system we use, the components of it, and how we enter trades. As a bonus, I'm going to be going over Bitcoin, BTCUSD live, a trade setup we missed today, but it looks absolutely lovely. And I'll give you a scenario of a possibility that a trade could be taken if price action closes below a specific level. Let's go into trading view right now. The first trade is S&P 500. Now I've left a clean chart for myself here, and I'm gonna show you the results in a second once we're done with the explanation of the trade. And I'll actually show you as well the snippet from the trade that we've taken. Let me just scroll up here and I'll find it. Give me a sec. I think this is it. Yep, there it is. S&P looks good. You can see multiple buy positions here, starting with one down there, and then multiples up here. This is the 2-minute chart on the left and the 4-hour chart on the right. I think I'm going to scroll a little bit up, and I think I'm going to find the chart. Nope, it must be somewhere here. Yep, there it is. There's the chart, S&P 500. There's the trade setup, the take profit up there, but we obviously closed sooner. We closed because of this resistance here. And the profit was good. Anyway, let's go. So we only enter trades at primetraders.com based on the fib retracement. The way we use it is if we're going to be going long, if we're looking to go to a long position, what we do is we take the top, we take the bottom of price action, and then we look for 38.2 and 30% to be a supporting level. Furthermore, we would enter as well at 61.8, but that's not in every case. The indicators I'm using is RSI set to 5. I'm using the 1-hour chart here, and I'm waiting for RSI to come down to the bottoms, as it did here. So that's indication number 1 is RSI. There it is. That's one of the triggers, and being on 5, you can see it move from overbought to oversold pretty quickly. And since we're day traders, I like to go in pretty big and have a big risk reward and I like to compound as well. So I'll explain to you the risk reward scenario first. The way we trade is I usually enter quite big over here, and I keep a tight stop loss. And my stop loss usually targets the shadows of previous trades, such as this shadow over here. Where is the zoom in? I can't find the zoom. Whatever, I've lost it. Somehow I switched this off and then I'll turn it on. Anyway, you can see the spike over here. I'll ping it for you like this. The spike right there. So our stop loss would go like this. Take profit would be entry anywhere between 30 and 38.2. Argument's sake, let's say we enter the 38, and the stop loss would be right below that level. So 0.684%. Take profit up here at this level, or at the next resistance, which is 100%, right up here, or at the close, which would have been hit 2 to 4. Decent risk reward. And up here it's 3.6. But in any case, we've made good money because I compounded this trade, and I've compounded it at the second push over here. If I go down to the 10-minute chart, you'll see this better. So the second push, we entered one trade, you saw that, and then multiple trades after that. Check this out, top to bottom, right? Again, top to bottom, 38 and 30% support. Furthermore, a beautiful contraction of price. This is a contraction when price is sticking in but becoming tight, or a wedge. RSI coming down on the 10 minutes again down here. Even though I did this on the 2, still looks good on the 10, and then boom, and I came out at 61.8 on this one up here, closed on. Multiple trades were taken, but a second entry was formed after this, which I didn't take. So if I take the stop and I go down to the bottom, I see 30% holding again. You see this would have been a secondary entry, and then I could have done it again here. If I take bottom to top, 38 again here, could have done it again, but I didn't. So let's get down to the basics of the trade idea. You can clearly see price action having a decent, let's say, resistance support level. You can see this here. Oh, come on. There we go. See that right there? We have support, resistance, support, clearly a pretty important level. Furthermore, we've got this zone right there, right? But the main criteria for the trade is the fibs. We do not enter if the fibs are not there. Capiche? Very good. Another thing is we had this trend line here. See this? So when that trend line broke, I bought again, and that was right somewhere there. I came out on the high of this candle almost, and yeah, I made some pretty good profits, and those profits are about, well, I'm not going to go over that right now, but whatever. And then the way I would target this is either the fibs, but this is a 1-hour chart, so it takes a while to reach, not always, but the next thing I would target is this level here, you see? And that's exactly what I did. See? Support, support, resistance, resistance, support, breakout, resistance, you see? And then boom. So from here to there, that's a pretty healthy gain and very good for day trading. I don't know what else to go over. The Dow Chain channel was irrelevant in this trade setup. I use it for more trending markets. This is a trending market that's going up, but it's very spiky because of the elections. You see this here? That's the elections there. Boom, 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 boom. Pretty crazy. Should open up higher. I don't know. I really don't care if it opens up higher because I'm not in the trade. And yeah, so let's go over the criteria again. I use RSI 5, Dow Chain channel. I use 30 and 15. So if I show you 15, it could become relevant a little bit. There's 15. Same thing, price action holding, breakout, resistance, and then we broke out and used it as a support. So price action moved to the upside. But it's kind of irrelevant in this trade setup. I don't use it exactly to determine every single trade. I do use it to gouge momentum, short term and long term, especially on the 4-hour. If you can see here, price action is way above it. That's pretty much it on this trade setup. You see that I don't use any other indicators anymore. I've just used the 5 RSI, and the reason I use 5 is because I really just care about recent price action. And again, main criteria is I would never enter a trade unless 38.30 isn't a support or a resistance. My entry criteria is there. Many times I get stopped out very quickly, and that's something I really don't care about because my ultimate goal is profit. That's why I come to the markets. Don't come here to be right or have a beautiful track record. The only track record I want is profits. That's it for this one. The next one that I want to go over is Bitcoin. I want to show you this. Check this out. So we've got the 4-hour chart here, and we have the same idea again. We have the bottom of price action. You see the swing down and then swing up. And then we have the top. Then we have price action rejecting these two levels, also rejecting the... But this is the 4-hour chart. This is where my Dow Chain channel becomes a little bit more relevant. You can see price action slowly sticking around the Dow Chain channel. Then we had this really strong push, and then we closed above it. This indicates that there is a really high chance of further momentum, and you can clearly see that. Again, would never have entered the trade if a rejection or this isn't a support. We also see an alternative scenario from trend lines. Resistance, 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 breakout, support, and push up. But I wouldn't enter a trade again unless the 38.2 and 30% isn't there. Furthermore, we've got RSI heavily and oversold, giving us clear indications to give it a go. Now, unfortunately, I wasn't here when that happened, but I am here for the next scenario. And the next scenario is this. I'm going to clean up everything, and I'm going to show you what could be on the cards. We could have a secondary option, and that's a possibility to sell. First, we have an accumulation zone right here, right? There it is. Up, down, up, down, up, down, and then clearly somebody just took profit and whoop, we went down. And we went pretty strong down. The percentage loss from, let's say, top to bottom, let's just use this accumulation zone here, to bottom is a 9% drop. That's a big one. Now, there's still an hour and 44 minutes to go, and if price action closes at 30 or below, in this zone of 30 and 38.2, I might just look for an entry, and I would do that on the 2-minute chart. I would be looking to go short. Weekend trades are still available, which is good. We have a little support here. We have a separate support here that just got broken. See that? So I could be looking into it, but what I would do is wait for a bottom, and then any kind of pullback, I'd be waiting for the fib retracement 61.8, 61.8 or 30 or 38.2. But for now, I'm keeping my eye on the 4-hour chart. I've got an alarm bell set right there at 30%. If price action comes to 30%, I'm going to get a notification on my phone, and I might go into the trade. Furthermore, we have RSI coming up to the 70 level, which is really good. And again, this is a pretty good accumulation zone, which has already worked. And if we check the 1-hour chart, we can see that there is some sell-off happening in the first 17-18 minutes of this candle. We also do have a nice little trend line supporting this level here. And if that breaks, we could see strong sell. Could is the main key phrase, because we do have a support zone right there too. You see that? Check this out. See? Resistance, support, 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 breakout. There's a bit of resistance here, and then we have a breakout above support, and we went up. So this level would be important as well, but I would only be entering within this zone here, 30 and 38.2. Because if I do, that gives me the best risk-reward ratio. Let's say I enter in the middle of these two. My SL would be right above this here. I would be looking at these levels here as well, just to avoid these levels. And what I would do is I would go down to 161.8, for example, or actually not 61.8. I'd go to 1236 because that lines up. Let me show you. That lines up perfectly with this support here. So 123.6. That's how I find my take profit. Lines up with this key trading level right there. You see? That's pretty much it. I don't want to go over too many things. I want to show you the profits of S&P 500 on both accounts. So bear with me a second. You'll listen to music for 7 seconds and you'll see the profits. And then let's go into the lesson for today. Okay, so I said that I would put a screenshot, but no, I'll just show it to you live. There it is, live account, live profits, US 500. Buy. Pretty decent and big positions, and a very hefty profit of 4.5 thousand. As you can see, this was a smaller account. I like to risk a bit more. I got an active trade on gold here. Sell, as you can see, it's on the 1H, but I've done it actually on the 2-minute chart. This accumulation zone here, very similar to Bitcoin. It could gap up, which doesn't bother me too much, so I might close it with a decent profit and that's it. But yeah, there is US 500. I'm not going to go over the bigger account. There it is, 4.5 grand. Very nice. Okay, let's move on now. Okay, now that we're done with the trade examples, I know I've just given you one, but still, it's a good one. Let's move on to the next setup, which is... well, not the next setup, the next lesson, or the main lesson for this session, which is trading better before going bigger. Now, new traders make many errors in trading, and believe me, I could go on forever about the reasons for their losses. But today I want to focus just on position sizing, because that is literally the antidote to the virus of big losses. One of the biggest errors that new traders make is that they just trade too big, and by trading too large of position, they use random position sizes, and they inevitably give back any profits they make to the markets. Richard Dennis, who is an excellent trader, or was an excellent trader, or is, I'm not sure, has an excellent quote that relates to what I'm saying. Trade small because that's when you are Trade small because that's when you are as bad as you are ever going to be. Learn from your mistakes. He means by starting a new system, by starting out to trade, trade small. Trade small. And when you're wrong, you're going to be losing small amounts of money. And you're going to be able to learn from your mistakes. If you are starting out to trade, or trading hasn't been too profitable for you, or you're just testing out a new system, like the one we use at primetraders.com, you should be trading your smallest at the beginning. And there are many good reasons for that. One of them being you will be able to learn from your own weaknesses and find the pros and the cons of your trading system. Look, confidence in trading should only come after you've proven competence and gained the necessary experience in maintaining discipline, to follow your own trading system, apply position sizing, and most of all, have an equity curve that's pointing up. One of the best advices I can give you is to use structured position sizing. Position sizing is one of the most important factors that will determine your long-term success as a trader. This is not just for new traders, but for all traders. Part of any profitable trading system is proper size per trade to limit their size of any loss. The biggest cause of unprofitable trading is big losses, and that comes from wrong position sizing. Now at primetraders.com, we have plenty of solutions, and our main mission is to create a community that's built on successful traders, traders that have real skills. We have a little tool that we use, an Excel file, that literally determines and tells you the exact position sizing you should be using after you finish every trading session, whether you made money or you lost money. If you made money, your position sizing is going up based on the percentage gain you have, or if you're losing money, it still goes down too. Anyway, don't want to keep you too long. This is a pretty long video. It's the weekend and I've got things to do, such as spend time with my family. I'll see you guys in the next video.